Good morning. Welcome back to our weekly professional insights brought to you by the National Referral Network, where we talk to licensed professionals about real issues to help you see how a coordinated financial plan can create clarity in your business ventures. And this morning, we have Randy Sadler, the principal and CMO of CIC Services. And CIC Services is a consulting firm specializing in the utilization of captive insurance companies, which I didn't know much about until the other day. So I thought it was very important to have them on. From my understanding, captive insurance companies help businesses achieve their overall risk management. But before we get started, as always, you guys, make sure to hit that subscribe button, that notification bell. We put these videos out every Tuesday morning to help you get clarity on your financial plan and business structures. So, Randy, good morning. Uh-oh, we just lost Randy. That doesn't happen. Okay, so let's give Randy a second to come back. Okay, so welcome back. Little technical issue here. So we're going to jump right into this. Simple question, Randy. What is a captive insurance company?
Yeah, really simple answer. A captive insurance company is an insurance company that you own. So think about like having a health savings account and that you can save money on your health care that way. If you own your own insurance company, you can save money on insurance, and insurance companies have special tax advantages. You can take advantage of those too. So it's like a giant win-win for most business owners.
So what are the primary benefits of forming a captive insurance company for a business owner?
Yeah, so really the primary benefits, first and foremost, are really taking control of your insurance, at least part of it, right? And that can help you control your insurance cost because you're insuring part of it and then normally reinsuring part of it out of your insurance company. The second benefit is really a ability to asset protect. So insurance companies are hard for creditors to take away from you. So that's a way to wall off money. A third huge benefit is that insurance companies benefit from special tax treatment. All of them do. And so you're able to tap into that. So not only can you have maybe better insurance protection, but in most cases, over time, you keep more of your hard-earned profit. So it's a powerful financial strategy and also a powerful risk management tool.
So what size company can have a captive insurance?
Yeah, well, there's really no true limit on that, Michael. However, most companies that have, say, 10 million or more revenue in a year likely have enough insurance risk that it's worth looking at owning an insurance company. That could be everything from your property casualty coverage to potentially putting your health insurance in an insurance company or running a warranty program through. All of these are ways to really generate extra profit for the business and the business owner, take advantage of the tax treatment of insurance companies, and create, substantially more reserves than you would have had otherwise.
So my understanding from a long time ago was health insurance was a captive. And then after speaking with your colleague last week, there are
Rob?
actually different types of captive insurance. Can you quickly go through the different types of captive insurance companies?
Yes. So let's first talk about things you could cover. That probably
Perfect.
yeah. So there's property casualty risk, right? So property liability, cyber. Think of a wide range of things: employment practices, business interruption. All of these can go in your insurance company. So that's very powerful. Then you can also insure things like warranties. And so very often, if you're selling somebody else's warranty or you have a product that can be warranted, running it through an insurance company will turn that into a really nice profit center. And then many of our clients put healthcare in their insurance companies. So when your insurance company takes a layer of your healthcare, usually you wring about 10-15% cost savings out of that and keep that in your insurance company. And then finally, in industries where you have bonding like construction or mining, your insurance company can actually issue your bonds. So a lot of times bonds are money you feel like you're throwing away. By running it through your own insurance company, you can actually start keeping a lot of that as extra profit. So those are some really obvious ones that most of our clients look at if they qualify.
So, Randy, you mentioned warranties.
Mhm.
So I think that's for the common individual, especially with business owners, because not everybody's in construction. But when we buy things online, there's always a 30-day money back guarantee or some sort of warranty to it. So how does that work if you have your own warranty service, if you will, through a captive?
Yeah, so normally it can work one of two ways. Very often, if you go to a car dealer, for example, they're going to have a company that issues you a warranty, say for 3 years.
Hmm.
Then that company's going to insure most of the risk of that to a captive insurance company owned by the car dealer, right? So that's one way. The other way is that your company simply issues the warranty, and we see this a lot, for example, in the HVAC space, right, where they install a new air conditioner and say, hey, we're going to give you 5 years above the manufacturer's warranty, but you've got to call on us every year to service it twice a year.
Gotcha.
And then what they do is they reserve money in their captive insurance company in case they have to either make repairs or if they have to replace the HVAC before the 10 years is up, then the money's in the insurance company growing and ready to make that repair when it comes. So they would just file a claim on their insurance company as an HVAC repair company, and then go out and make that change.
So what are some of the misconceptions about captive insurance companies? Because I didn't know about these, and I've been in the financial services for what, I think 12 years now.
Yeah,
So what are some of the misconceptions about captive insurance companies?
yeah. I think the biggest one probably is that they're only for large corporations, right?
Gotcha.
That a small mid-sized company couldn't use a captive. Frankly, if your business is say 10 million or more in revenue, there's a decent chance that a captive it'll be a fit for you, and we could figure that out very quickly going through a short questionnaire. I think the second big misconception is that they're all offshore. So,
I
you
read that.
kind of have this like, large corporations have these offshore tax shelter captive insurance companies. So they get a bad name, really, which isn't true. A lot of times, offshore regulators may be easier to work with, or a lot of the ones that are offshore, it may be just that the corporate risk managers want to have a justification to go on vacation there once a year for a board meeting. So let's not give them all a bad rap. But really, a lot of insurance companies are onshore. Frankly, all the ones that we manage receive their insurance license from U.S. states. So our most common states are Tennessee, North Carolina, Delaware, Connecticut, Utah, Alabama. They all but 38 states license insurance companies, and so you don't have to be offshore. I think those are probably the two largest misconceptions.
Does it create more risk of the captive? Because I know this is a highly regulated space. Being offshore, does it kind of leave that door open for more regulation risk?
Yeah, I think especially for a small mid-sized company that doesn't have a team of lawyers to fight for it, yeah, certainly being offshore probably opens up more scrutiny. So frankly, in our estimation, the benefits of being offshore aren't really outweighed by the risk. Yeah, so we'd recommend being onshore for a small mid-sized company.
So speaking of the risk side of things, in what ways can a captive insurance company impact a business risk management strategy?
Yeah, so several ways. First and foremost, I think, is looking at the insurance coverage that you're buying, and perhaps some of those are very expensive. And of late, there's been a lot of rate increases, right? So,
Mhm.
if you have a licensed insurance company, it can often provide the same or better coverage for the same or better price. The difference is if you don't have losses, you keep the money, right? So that's number one, especially if you have good loss controls. Number two is you're able to insure things that you're not insuring today, potentially that are very hard to cover, like business interruption, law changes. To name one, a cyber insurance in the commercial market
Yeah.
hardly covers anything. Our policies are more robust. And so there are a lot of risks that you face. Wage and hour, very often very hard to get insurance for that, but a captive can cover it. So you're able to cover a lot more coverages. So that's a big one. And then I think the third really is you've got some control over your claims. So very often insurance companies will settle something they should fight something they should settle, and lose both times and give you a higher bill next year, right? So you've got some claims control. Do I want to fight? Do I want to settle? A lot of times a business owner is going to make a better decision than the insurance carrier. So having that control over claims is a big deal.
So on a personal liability standpoint, Randy, you've got your insurance, your different homeowners insurance and all these different policies. And then you have an umbrella policy to kind of as a larger pool of money to cover everything. This is not an umbrella policy. This is a standalone, the company owns it. It's their insurance company and their products. Is that correct?
Yeah, exactly. It's a
Okay.
standalone insurance company that you own as a business owner, or your company owns, or maybe a holding company owns. But it is a C corporation. It has a license to write insurance, and it writes insurance to your business, and can basically direct write almost everything that you need to insure. Yeah. So you just got to decide: do I want to insure it in my captive? Do I want to insure it in the commercial market? Or do I want to blend? Most of our clients blend some coverages within the commercial market with coverages in their captive to get really the most robust solution they can.
And
Yeah.
when evaluating that process, Randy, what are some of the steps that a business owner can take to evaluate whether forming a captive is even a viable option?
Yeah, I think the key is to talk with you, and then you can introduce them to us. I think that's a great place to start. If their business has 10 million or more revenue, let's look at the risks that they're insuring today and talk through those. We've got a simple questionnaire that we can send out. Takes about 10 minutes to fill out. It allows us to put together some modeling. And what it really looks at is the size of the business, what the operations are, the revenue, but then the insurance they're buying today, and if they know it, what their losses are. And so very often you'll see businesses are paying a lot of money and they haven't really had losses in years, or maybe they're paying a lot for healthcare and don't realize that there's some really untapped profit there. Or they may just have a lot of parts of their business where they're not insured. They're very vulnerable, and it would make sense to insure those, and then take advantage of the tax benefits of owning an insurance company, right? So it'd be great if they'd be willing to reach out to you or me, and we'd be glad to set up a call, walk through the questionnaire, and then see if the insurance company makes sense.
Now, Randy, a lot of these things I'm going to go to, I'm going to kind of put the business hat on right now, because a lot of the things that we've talked about sounds like I've got a lot of work to do as a business owner. I mean, just the idea that it's my captive insurance company. So walk through some of the management side of this thing. Am I managing this as a business owner, or are you managing? Who who takes care of this big vehicle, Randy?
Yeah, well, the great news is we run it for you. So we're
Okay.
essentially like a third party administrator. The first year that you get your insurance company off the ground, plan on about 10 solid hours of work on you or your staff. And that's assembling the information we need to do your underwriting, your risk assessment, and form your insurance company. In ongoing years, typically 5 hours a year, which is your annual reviews and review of your policies, your risk management plan. But really, we do all the work for you, and then you get all the benefits. So it's kind of like hiring a property manager to run your apartment building. They do all the work, you get all the benefit.
Randy, when you talk about risk management, I'll keep that business owner hat on, and you mentioned cybersecurity early, which is a massive risk right now and is growing. Most business owners aren't addressing it. How do I even address what risks I have to even establish this conversation is viable?
Yeah, I think what we like to do is introduce a third party risk assessor that walks through your entire business, and that's a small step. It's a $5,000 investment. You get a detailed report on all the vulnerabilities you're not currently addressing,
Wow.
and that's a great place to start because it's an eye opener. And a lot of businesses thought they had business interruption during COVID. They didn't, and they got crushed, right? So that's a classic example. All of our clients had their claims paid because the business interruption and the captive came through. So we'd love to do a risk assessment of the business, bring in a third party, so it's really going to be neutral, not us telling you. Yeah.
And Rom actually brought that up, and I want to highlight this real quick, Randy, because you just brought it up and reminded me. With business interruptions with COVID, your clients were able to sustain their businesses because of this pool of money in the captive insurance company, correct?
Correct. Yes. Yeah. Our captives paid out about 15 million in claims to business owners and helped them weather COVID. And the captives share in a pool, so it wasn't just their money; it was money from businesses that weren't affected, right? It's reinsurance, if you will. And so, yes, huge benefit to our clients during COVID.
And just like the large insurance companies, there's that pool of money because they're able to invest into things within that pool, correct?
Yes, that's right. That's right. So they're able to share risk with other companies, and then you have control over your investments and how they grow in your insurance company. That's exactly right.
That's
Very,
impressive.
very powerful. Yeah.
So, Randy, I know I want to be cognizant of the time here. Any other information that I might have missed that would be relevant to the viewers and how to educate them? Oh, I guess not. Okay. So Randy was having some technical difficulties. I will thank him when he gets back. Um, his link, everything is below you guys. If there's any questions, please reach out to us. We're here to help. Every Tuesday morning, we have these interviews. Hit that subscribe button, hit that notification bell. And other than that, I will see everybody next week. Thank you for being here.